So it looks like Trump tariffs will go into an effect on August 1st. So what do we do to protect our portfolios and make some good money? In this video, we will talk about the tariff impacts on economy and market. We're going to look at most impacted sectors and the least impacted sectors. We're going to talk about how to adjust your portfolio, and I will tell you what am I doing. So first, let's look at how tariffs impact the economy and market. Tariffs are pretty much taxes on products that are imported from other countries. So let's say you can buy a chair from IKEA for $100 and your neighbor has a business which produces these chairs locally and they can sell them for $110. And if the tariffs are 20%, at IKEA the chair now costs $120, so it's cheaper to buy from your neighbor. For you, everything got a little more expensive, but for your neighbor, the business is doing better. So, we can obviously expect more expensive imports, so we can expect inflation. We can expect possible trade wars, because other countries may retaliate as a negotiating tactic or for some other reason. But anyways, we have to take that into the consideration. Supply chains may also be disrupted. So what's going to happen to the market? How it is going to impact us investors? Obviously, companies will have growing manufacturing costs. People could be expected to consume less in short term and mid term. Volatility in stocks is going to increase. I expect the money will move from growth stocks and more to value stocks. And we're going to talk about this a little bit later. But first, let's talk about the most impacted sectors. So let's first start with tech. As I said before, the manufacturing is going to become more expensive. So we could expect smaller margins. Consumers, people may delay their purchases because the products are more expensive. For example, somebody was buying every single newest iPhone that there was, and now the money is tighter, and he may decide, okay, I will skip this generation and just get the next one. Retail is going to have similar effect, only we could expect larger pain in the top line, not the bottom line, compared to tech stocks. But both are going to suffer either way. Auto industry. Now we are sure that Chinese EV companies like BYD is not going to conquer the market, the domestic US market. And obviously US automakers are going to have less competition, which is a good thing in the short term, but you could argue is not a good thing in the long term. But US automakers can have some problems making money globally, since, as I said before, some countries may retaliate with their own tariffs on the United States. And let's say there's some tension between US and China. And for example, for Tesla, if the Gigafactory Shanghai is going to be closed, then it's going to be very painful. Now, the least impacted sectors: healthcare, pharmacology. Obviously, people are going to get sick regardless of politics. And more sectors that are not that impacted by this whole tariff thing are going to be insurance, banking, finance, and software, because simply tariffs are not in the way for them. And the next thing is me asking you to subscribe to my channel. I have already 139 subscribers and I make videos every week. And my goal is to get to 1,000 subscribers, and the only way I can do this is with your help. Now, let's talk about how do we adjust our portfolios in this situation. First of all, we could reduce exposure to the most impacted sectors. That's obvious. We could increase exposure to companies that are more oriented for domestic markets, for the domestic United States market. Another thing would be moving to safer assets. As I said before, the money is most likely going to move from growth stocks to value stocks. And right now, there are many great value stocks, but I could recommend PayPal and Adobe stock. I have detailed videos about both of those stocks, and you can check them out in the description. We could also move to more dividend investing, utilities, healthcare, and another thing is increase your cash pile. Since the market is going to become more volatile, there's obviously going to be great dips, and we have to use this opportunity to buy those dips, and you cannot do that if you don't have cash. So, what am I doing? My largest position is still AMD stock. And in spite of these tariffs, I'm going to keep holding and buying this stock, because when you get a company that's as great as AMD stock right now, the best thing to do is not to get distracted by the noise, not to get distracted by the short-term swings, and just hold a great company, and it will reward you if you can hold it that long. And by long, I mean 5 to 10 years at least. I also have some more growth stocks, like Tesla stock. But the proportion of the portfolio needs to be reasonable, and it is. But I have a decent chunk in value stocks, in stocks that have absolutely amazing financials, that are printing money, that are doing stock buybacks, that have absolutely amazing cash flow and growth, and basically their risk is very large. And in situations like these, in these volatile times, owning stocks like these is great. And yeah, as you can see by this chart, the gray area is growth stocks, the orange area is value stocks, and the blue area is cash pile. Because as I said before, the market is going to be volatile, and I'm gonna use this opportunity to buy the dips. So, in summary, think long term, do not get distracted, do not panic, buy the dips, do some decisions yourself. I am not your financial advisor, neither are other YouTubers. If you want to take this seriously, you have to do some research yourself. If you care about the value stocks that I mentioned, AMD and PayPal, I have videos in the description. I also have a video about AMD stock. And I make videos every week, so feel free to subscribe and like the damn video. Bye.